Welcome to another Market Matters weekly video update. Welcome James, how are you today?
Well, thanks Nick.
Fantastic. This is going to be a short and sharp one. People keep their eyes peeled for our Outlook piece, which will be coming out over the next week before we do another video. But James, interesting market at the moment. It's having a bit of a breather today. It's off about 40 odd points last time I checked. Now what are we seeing here? How are we positioning it? Obviously we've got a fair bit of cash up our sleeve, so we are armed and dangerous if the market does present itself.
We are. It's a bit of a tale of two markets today, Nick. So resources have been strong. Banks are copying on the chin a little bit. So, from our portfolio perspective and our positioning, we're overweight banks at the start of the year. We've slowly trimmed into strength. CBA is our only position in the big four. We've got a 5% allocation, as subscribers would know, in CBA. In terms of resources, we've taken profits on a shorter term option. Bullish option position in Rio today. Rio had some good production numbers out this morning, so Q4 production. Iron ore was a big one for Rio that came in pretty much in line. A tad ahead of market expectations. Copper was a little bit slightly lower, and diamonds were a little bit lower than the market expected. But overall, the market's pulled back 120 points from its recent highs. Nothing to get overly concerned about, but that could change with tonight being Theresa May over in the UK outlining plans around Brexit.
Yeah, would you say it's the kind of market that looks flat at the moment, volumes are light, school holidays can affect it somewhat, but what's happening globally, we could see a bit of volatility over the coming days, weeks? Yeah,
I think that's a certainty. I think we've seen a really positive end to December, really positive start to January. The seasonal bias of strength over that period has really played out to a T. So the market made a high above 58.20 on the ASX 200. We're now around 5,700. So it's not a massive pullback, and the banks got a little bit over enthusiastic towards the banks. Investors did. Volumes aren't volumes are not a huge issue. We've had light volumes, but the market's pushed up despite those light volumes. So no, we're getting a pullback at the moment. We're sort of sitting on the sideline. So as you may mention, we've got 30% cash. It's good to have high levels of cash in our view at this stage, but it's a little bit too difficult. It hasn't pulled back enough to buy, and we've done the majority of our selling. So 30% in cash is probably where we want to be.
Awesome. And just quickly before we finish up, obviously the Outlook piece will be more comprehensive and will explain a lot of our views at the moment and what we're forecasting over the next 6 to 12 months. Two areas of note. One is the gold space. Bought a little bit of Newcrest. That position's doing quite well. And you've also talked about diversified financials as an area you're really looking moving forward. Just an update on the gold space, what we're anticipating there. Some people may not own Newcrest. Is it worth buying here? And also secondly, on the diversified financials front, is there a few that investors should be aware of and should be on their radar?
Yeah, definitely. So in terms of gold, Newcrest has started to go up after we bought it, so that's a positive. It's largely our view around the US dollar. So the US dollar is the long US dollar trade is very crowded. The majority expect, because interest rates in the US are going higher, that the US dollar will actually track higher. But there's interest rate hikes are already factored into the market. So when that consensus call happens, and we've spoken about this in a number of video updates, we don't want to be on that consensus call. So in the short term we see US dollar weakness, and that'll put an upward pressure on gold. So gold price is high, US dollar lower in the short term. That's why we've got a 5% allocation in Newcrest.
And also the Aussie dollar producers as well get that double effect, or not so much?
Yeah, no, because the Aussie dollar obviously appreciates if the US dollar is going back, so that's a slight headwind for Aussie dollar producers. But they've got good margins, they're low cost producers, so that's not a massive impediment, I wouldn't have thought. In terms of diversified financials, we've bought platinum, 530s, it's down below that. Now would be buyers again of that if it dropped below $5. That's going against the grain. It's cheap relative to its peers, but it's got a lot of headwinds over the last 12 months, and that's still being shown through the price action we're seeing. But we're reasonably comfortable in that to buy it below $5. BT we wrote about this morning, Henderson Group we wrote about this morning, two stocks that will get impacted by what happens tonight overseas. BT is down around that $10 level that we suggested as a buy in today's morning report. While we haven't pulled the trigger on that, is around the pound. So the pound versus US dollar is trading around 120. We want it around 118 before we get optimistic on the likes of BT, Henderson Group, and some of those exposures to the UK.
Okay, fantastic. Thanks a lot for the update, James. As I said, people keep their eye for the outlook piece. It should be coming sometime over the next few days, early next week. Now, any questions about the update today or any questions about anything in the reports, always feel free to email us at info@marketmatters.com.au, or conversely, you can always give us a call on the 1300 number, which is toll free, 1300 301 868. That was 1300 301 868. Thanks everyone for watching.